Welcome to the weekly Camp Plan webinar, where we talk about how to accumulate wealth and save on taxes using self-directed IRAs and investments. Today, we've got a very interesting project. We're focused up in the Northeast. We're in the Boston area, and we've got some gentlemen from Chestnut River Business House that have come here to talk about what they're doing at Bradford Village. I'm going to just get some housekeeping done out of the way. First of all, we're a custodian. We don't offer any advice. We can't promote or advocate or endorse any investment propositions. So what you're seeing here is strictly for educational purposes. We urge that you consult your tax prep specialist, your CPA, your attorney if necessary before you do anything in the self-directed investing area. Well, we're very happy to have three gentlemen from Chestnut River here today to talk to us. Moshe, I'm going to hand it off to you, and you'll make some intros for your team. Thank you.
Sure, absolutely. Joe, thank you for that intro. My name is Moshe. I work at Chestnut River alongside Ben and Al. We're going to talk to you about a really exciting project we have up in Haverhill, Bradford, Massachusetts, on the river. Stunning views, amazing opportunity. Before we get to that, though, I just want to tell you a little bit more about our firm and some of the principles that we have here, namely Ben and Al, some of their background and why we think this is a really exciting project. So jumping into it, we're named Chestnut River. We like to approach things by looking at assets in asking ourselves three questions. Do we like the market tailwinds? Does this project fit our skill set, and are we buying at the right price? And if we can answer all these questions in a positive way, then we're ready to pull the trigger on a project. We have a lot of development experience. We know the markets well. We've been in this area for a long time. And ultimately, when you buy right is when you do well in projects. Moving on to our sponsors today, we have Al Mendelson, who's originally from South Africa and is a respected builder here in the US, particularly the Northeast. He's developed a lot of real estate ranging from multifamily to Starbucks fit outs, ran Abapon as their director of development, and has built corporate headquarters for TripAdvisor, among others. Alongside him, we have Ben Marshall, originally from upstate New York, a graduate of Columbia, Harvard, and Yeshiva University. He's been a GC in this area for over 25 years and has built and exited on several companies in the ancillary construction space over that time. He also boasts a modest portfolio and has had excellent returns over that time period. If I can hand it over to Ben, I'd love to hear a little bit more about the project and what we have in store for us.
Yeah, thanks, Moshe. The three tests that you mentioned, I think that when you guys are watching this webinar, you should be asking yourself the same things. Do you think this project, that have we proven to you guys that the project has good market tailwinds, that the day we start the project, it should be worth more when we're done and we're ready to sell than it was when we started out, not just because of the work we did, but because in general it's a good market. Are we qualified to do what we're doing, and are we getting it at the right price? So think about those three things as we go through this, and challenge us if you feel like one of those questions is not being answered as well as it possibly could, because this is really the ultimate concept of a business plan. Are we going to make money for you? This project is 48 condo units across 3 separate buildings. The fact that each of the buildings are separate is unique. It's a little more expensive for us to build, but it creates a lot of really interesting benefits, not only for the final users of these buildings, but also for the investors. And we'll talk about that as we go through. We're building 78,000 gross square feet of construction. That includes the parking areas, which are under each of the buildings. There's going to be 50,000 square feet of sellable space in it. And what are we building over this 50,000 square feet? We're building large 1.5, 2-bedroom units, top tier finishes. Almost every unit that we're building is going to have a deck facing the beautiful Merrimack River. And the river is a big part of what we're doing, because we're building a riverfront community with access to boating. We're right next to a marina. We have our own dock on site. We've got work from home space in every unit, super energy efficient units with the dock on the premises. We have marinas. We have a bike trail that connects the property all the way from where we are in Bradford right down into Boston and all the connecting areas. We have a gym on site. We have a dog park, bike storage, an Amazon package room. Everything you could ever imagine, we're putting here. And we're excited because the amenities list is really a unique offering for the Northeast. The Northeast has a lot of old buildings without amenities, and we're putting something brand new, state of the art on the market. Moshe, you want to move forward? Al, do you want to talk about the timeline a little bit?
Yes, good morning, everybody. Al Mendelson here. So this is a project which is permitted at the moment to start foundations and is going to commence pretty much in this month. We have the initial contracts ready to commence. So we've done a brief layout of the estimate of timeline starting from end of July. We fully expect that the project will be in foundation within Q3, and from that point out to starting sales will be somewhere around September. And then it is our expectation that we'll have the project built in 3 phases, but the town, due to the waterfront property, wants it to be certificate of occupancy, all 3 buildings at one time. So we're putting a conservative schedule in place of about 23-24 months, which puts us at an occupation of Q2 2027. Sort of in the beginning of the summer of 27, these units will be occupied. Although with a modest amount of 48 units, we're fully expecting that these will be sold out way in advance. And that will bring us to how we're going to handle the actual construction. We are going to be doing a on-site finishing opportunity. We're going to have all kinds of options of finishes, and we'll have a sales office facing the river where you could see how can you bring the slide up, Marsh? Thanks. So we're going to have an on-site sales office and an on-site finish area where people could come and choose their units. Looking at the pent-up demand that we have at the moment, it seems like we're going to have a good percentage of this building sold as soon as we open it up to the public. We've had initial inquiries of an unexpected amount on the project. My background is that I am an engineer and builder and built a substantial amount of units, thousands of buildings, and we are based out of the local area. So the project is within management, physical management of our own means. We are going to be the professional managers on the site overseeing all contracts. So all economics and engineering of the project will be under our watch. The experience of this project is really this riverfront setting, which is absolutely beautiful and unique. The units can be upgraded as we go along to your own specifications, and those upgrades can start as soon as people have put a deposit down on the units. Can we have the next slide, please? Thank you. Ben, would you like to do the summary?
Yeah. So what does the investment look like? So the total, we're talking about 48 condos in 3 buildings. We're talking about a total construction cost of a total project cost of $23.5 million. There is total equity of $5 million required in the deal. We have already raised about $1.5 to $2 million. We're right there. We're looking to raise another $3.5 million at this point. The money will be in the deal. The equity is what we're talking to you guys about raising. That's the portion that's why we're presenting today. The equity will be in the deal for about 2.5 years. The way we've structured the investment is that the money comes into the deal. We're paying out a preferred return at 9%. And we're going to talk about these terms a little bit more on the next slide. But first, we'll just sort of go through what the deal looks like. So first, there's a preferred return paid out at 9%. And then once the money is returned to the investors, what's left over is the profit, and we're splitting the profits 50-50. So the investors first get 9% on their money. So if your money's sitting in a bank account, it's going to get 9%. Then the profits left over get split up 50-50 between our team and the investors. So it's a 50-50 split. Moshe, do you want to go to the next slide? All right, so let's just go through how this all boils down. The first is, how do we look at a deal? We look at a deal in terms of the IRR. Sorry, the IRR. The IRR is the internal rate of return. That's the average compounded annual return an investor would earn over the life of a deal. That gives us a simple metric to compare deal one to deal two. Ideally, you know, a deal that makes 25% IRR is better than a deal that makes 20% IRR. But as my grandfather always told me when he was doing business with me, don't worry about how much what your return percentage is. Take a look at how much money you make. So you also have to take a look at how much money you make. That is most easily calculated by the multiple of invested capital. The multiple of invested capital is a simple metric that lets us figure out how many times your original investment, the money that comes back, what you'd multiply that number by to get your final number back. And lastly, a preferred return. We talked about preferred returns as the first step of our waterfall. That's the minimum return an investor will make before the sponsor, that's us, takes anything off the table. So you're making 9% before we make a penny. That's how this works out. So how does the deal look? Let's say you were to invest $200,000 in the deal. You start getting checks back in month 22, and we'll continue to get checks back until month 28. The reason you're getting checks back earlier and not just a single check at the end is because as sales are coming in, as cash is coming in, you get the first right to get your 9% back on your money. So that is paying you off on your money. Overall, you make a 31.3% IRR on your money. That's a 31% annualized compounded return on your money, which is equivalent to a 1.73 MOIC, or multiple of investing capital. So your $200,000 you invested in this deal is now $346,000 in your bank account. We structured the deal this way because we thought it was a great way to protect our investors, their downside. Their downside's protected by getting that 9% pref in it. And we thought that the upside was excellent. We think, at least up in the Northeast, getting a 31% IRR on a deal is something which is really exciting to most of our investors. Moshe, you want to bring it to the next slide? All right, Al, do you mind talking about important dates?
Yeah, so we're going to have a soft commitment deadline somewhere in August, starting August 7, where we'll actually start allowing deposits. And what our expectation is that the initial flurry will be fairly substantial, because we've had initial inquiries at this point from the communities. This is, if I could just take a moment to speak not just about commitment, I've got to explain that this building is very unique in the New England market, both the waterfront and the fact that there is such a shortfall of new construction, new homes to be had. And we're going to speak about that further shortly. The fundraising deadline we would like to put at about August 21st. The equity raise we're looking for, as Ben just said, is about $3.5 million. A minimum investment that we've pegged is about $100,000 allotments. If anybody feels that they can't make that $100,000, Ben and I are open to some discussion about that. We obviously would have some minimum platforms that we would need to do just for costing that. And there are maximum slots at 100 of 35 slots, which is very little for a project of this kind.
Al, if I can just interrupt, the point of the minimum, there's a certain point, as you guys all know, with self-directed IRAs, where it's no longer very efficient to invest with an IRA under a certain amount. So 75,000, 100,000, this is a conversation we want to have with everybody involved in CamaPlan and the different and all of you, just to make sure that the cost of actually investing the money doesn't eat up too much of your returns.
Yeah, I think 75 to 100 would be the minimum.
Yeah.
Can we shoot down to the next slide?
Sure, absolutely. Ben, Al, thank you so much for explaining and outlining the investment. Going back to some of the questions that we asked at the beginning of the presentation, if we like the market, if we like, if this fits our skill set, the next couple of slides are going to talk a little bit more about the market. We got a number of broker opinions to outline the market. And Ben, if you could tell us a little bit more about what these involved and how they show us why this is a great opportunity in a great area.
Actually, I'm going to push this one over to Al. Al is the expert. He lives right here in the market, and Al, take it away.
So the broker opinion of value, we treat all our projects as if we're doing our own investments, and so we were very cautious about how we approached trying to work out the economies of this project. So we went to four very substantial brokerage houses with great deal of both development and brokerage experience. And we asked for a broker opinion of value. They were all given the same specification and construction plans. And they all came back very close to each other. So the price per square foot average that they came in with is about $680 per square foot selling price. And it's important to note that the projects that they've earmarked are very similar, both in waterfront setting and in locale with the amenities. But the other thing you have to remember is that we are really the only game in town that's new construction. Some of these projects were built 5 years ago, 4 years ago, and some even earlier than that. So one of the things that's a little bit deceptive is this is a price per square foot, but we know that when using Hatter's Point, for example, the middle slide on the left, as an example, that project is now turning over its units at a much higher price. So that's a very interesting fact to pay attention to, because if you decide to commit to this self-directed IRA and you do take a reservation, there's an opportunity here that's something where you could make an additional profit, because these units are going to sell in the secondary sale at a much higher price. It is fully our expectation that where we start off with is going to be an introductory price. But watching what's happened with Hatters, which sold under $1 million, now they're at $1.4 million. So I just want to point that out as a developer who's been around a long time in this area. And the projected sellout is self-explanatory on the right. That's on a gross sellout. But the price per unit is the average per unit that you have, and some of them are obviously significantly larger. Some of the units are 1,400 square feet on the penthouse side, and then some are smaller at 1,000 or 900 square feet on the one bedrooms. And so the square foot just works out as an exponential. But we're very confident on that $680 a square foot starting price, as we've had such in-depth conversation with these formidable brokerage houses. And then there's one more question that comes up to me quite often. The area of Bradford, when people look for opportunities in that area to purchase or do self-comps, which most people do on the internet, there is very little to comp this project against. And it's very important to understand that you cannot comp a waterfront brand new construction steel 5-story elevator building with all amenities to an existing 50-year-old single-story ranch, which is most of what's happening when you look at the internet comps that are coming about. But what is important is that you comp this against the other units that are available, which are very few. And if you comp them against the other units in the surrounding areas on the 495, 128 belt, the routes around the New England area, you find that we're actually the most conservative in our pricing, because the prices run between 2,000 and 4,000 square feet in some of the other areas. So we end up being a very affordable project when comped against the new construction competition in the New England region. I
So
think
Al, who would you expect to buy this? Most, you want to go on to the next slide?
I expect the buyer demographics to be a very diverse buyer, but I do expect empty nesters, people who've raised children, got them through college, and are now looking for a convenient solution to keeping a footprint in New England. And then The draw being that you have so many logistical advantages of being in this area would bring in the 28 to 50 singles, the divorced individual, maybe with one child, maybe not, with a dog, without a dog. I see it as a lifestyle choice here, but again, keep in mind, this is not a massive project. This project is only 48 units, so I think it's going to be something we're going to assume is going to be in this, but we could be surprised. I've had a lot of conversations through my professional networks, and what I found is that some of my friends who are boating enthusiasts have loved the idea of just buying one of these units to get a boat in the water that they can then use. So for people that may be listening to this cast and are not from New England, you can be in the Atlantic Ocean in about 25 minutes from this location, and in Newburyport, which is a major whale watch and fishing port up on the North Shore, in about the same time. So it's important to understand that this project gives you a lot of hobbyists, it gives you a lot of enthusiasts for the water as well.
Moshe, can you show us the next slide so we can see where it fits in? There you go.
So this slide is a good slide, but not a great slide. So I'll tell you why. Because we're looking at a 3D slide, and what is a little confusing is here is the project over here on the waterfront. And the discussion here hinges around the yellow symbol. But what we should allude and tell you at this point, we also have under agreement these 5.5 acres next to us. So this is the phase one of another project which we're going to continue. So we really are going to be building our own market around this project with a lot of amenities, and we're going to upgrade the whole area. The other thing about this slide, which is interesting to see, is that on the one side of this project, there is a bicycle path that goes north. On the other side of this project over here is a bicycle path that goes south towards Boston. Well, we're at the breach in the bicycle path. So when we connect those two up, we end up giving people the opportunity to basically ride for as long as they want to, all the way into Boston, Cambridge, all these well-known areas. Now, let's go back to talk about the actual project. The project's located here in the Bradford area, and this is the Atlantic Ocean. Up here in the distance is where the Atlantic Ocean is. All along the top of this slide is the ocean. So if you were to grab a boat ride from here, which our partner Ernie has told us, you basically would do this and you end up in the ocean. So it's an amazing opportunity. And just a quick story, apropos of nothing, it's also a very diverse fishing location. And I had the strange opportunity because I was on the site one day and there was a guy fishing right in front of the building site on our property, and he was catching stripers, which is the season at the moment, and he had 2 rods and he was landing one and the other one went off. So everybody was laughing at me because I landed a striper in my working suit. So it's a very fertile river with amazing opportunities. So that's a little bit about the area. Now, for those folks who are not familiar with where we are, the other part of this is very important to understand is that all around this area, there are marinas with very large capacity. To the left of us is Crescent Yacht Marina. To the right of us is Mariana's, which is a massive marina. And then in between, there's a lot of other opportunities. And just across the bridge, you have an immense amount of restaurant opportunities, CVS's, Walgreens, and all other amenities are just here across the bridge, as I'm indicating on the slide for those that can actually see it. And I think that tells you a little bit about the area, and probably you can hear from my voice the excitement of such a unique location.
Moshe, do the next slide. No, go the other. There we go. All right, so the question here is the macro. We talked about this in the beginning. Why in Massachusetts, right? People know in different parts of the country that the real estate market, it doesn't look like it's it's not doing well. But in Massachusetts, we have done the unthinkable. We've managed to dictate, to screw up everything so badly that nobody can possibly get new projects permitted. So in an amazing world, right? So we always joke in Massachusetts that if you want to get something done, you should probably move to Texas. But here we have a fully permitted project that's ready to go, that we're starting construction in the next week or two. And that makes it a really unique opportunity. We have a massive lack of housing. We have huge amount of jobs here, and no new housing is coming on. And what this slide is showing us is that throughout the entire United States, of the 50 states, Massachusetts ranks right down at the bottom of how many houses are going to get permitted or have been permitted per capita. 2.5 units per capita. And so, okay, so permitting, it's almost impossible to get something permitted here. But now let's see the next slide. It's even worse. Not only is it almost impossible to get something permitted here in Massachusetts, once it's permitted, no one's even building them. Why? There's so many other things involved. We have so many unions. We have ridiculously high costs that go into it. So this created a great opportunity for Al and I to do this project, because this is what we know, this is what we love. We are in the field every day. We're meeting. I'm literally right now on the job site as we speak. One of our other partners, Ernie, raise your hand behind me, Ernie.
Yes, sir.
Is the plumber who's going to be doing the work. We are doing everything we can to make sure that our construction costs and our borrowing costs are rock bottom, and that all boils down to profits. So this is.
I think if I can interrupt you, Ben, it also
Yeah,
means
please.
that you understand not just who you're buying from, but also that if there is an issue, which we don't expect, you can call us, because we're in the business, and with an ongoing multiple phase project of a lifestyle community coming next to you, we'll be around. We're not going anywhere. So there's never a fear that you're buying from someone who's just a developer who's hitting an area and leaving.
That's right. It's a very old school business approach. We're not bouncing around the country doing stuff in every little corner. We're working in our backyard and we're not moving. We're just moving next door to keep building up this property when this project's done. Yeah, motion, move on to the next slide. That's great.
Sure. So I guess moving on to a couple of disclosures on the project. Yeah, I think we've explained, Ben and Al at least, how they've been doing this for a long time. But as always, there are just things that come along with an investment. Ben, if you wanted to go over some of these and talk a little bit
Yeah,
about.
these are the generic risks that we have to talk about for every time we have investors come on. There are so many things that we cannot control. We can't control whether or not there's going to be a massive market crash. We can't control. In this case, we don't have tenants. We're not renting it out, but in our projects where we do have tenants, we can't control what's going to happen with specific tenants, or if it's commercial properties, the lease turnover, vacancy risk. That doesn't really apply here. We are pre-selling these units, and we intend to be fully pre-sold by the time we get our certificate of occupancy. So that's actually a minimal risk on this project. Financing risk, we do have our financing fully in place, but weird things happen, so we need to state it. Liquidity risk. There is a scenario where the whole market locks up and all of a sudden we're ready to sell, and our buyers can't access capital. Most of our buyers, though, we do expect, because of the 55 and older, are going to be cash buyers. So that mitigates a bunch of that risk. Regulatory and zoning risk. We are through all of our permitting at this point, but there is a scenario where a new zoning comes up or new regulation comes up. We don't know what it's going to be as of right now, but in the scenario it does come up, we need to tell you that those risks exist. Operational and maintenance risk. We don't know this. We don't know what we don't know, so we need to tell you all these risks are here, and they should be scary, because investing is scary. It's not a guarantee. No matter how confident we are, there are always those unknowns. I think Al and I have both been around long enough to realize that no matter how good a deal is, we are constantly being hit with surprises, and we do our best to mitigate them, but we can't control every surprise.
I think it's important, Ben, that folks listening to this understand that both you and I are actually owners and operators as well. So we do, and speaking for myself, I actually own and operate large buildings throughout the southern states. And so management is something we're familiar with, of the operation, maintenance risks and so forth, and we know how to minimize those. And Ben is an owner in the New England region, and also knows how to manage and maintain and so forth. So it's not something that's new to us.
Yeah, and we've also both been business owners for a long time. So it means that things like job site safety and making sure that we're compliant with the codes and we're communicating with the local building inspectors. These are all things that you're probably not going to hear other sponsors talk about, but they are what can make and break a project, and we take them very seriously. So there's a lot that goes into these projects. There's a lot of different risks, and we're putting our own money into this also. So that's
Very important point.
yeah. That's okay. So let's.
Are there
Okay,
any
so
questions?
just in summary, guys, the soft commitment, this is moving quickly. Soft commitment would be a week from today, August 7th. Fundraising deadline is going to be 2 weeks from that. We really want to invite you guys to reach out to Al and myself, ask us questions, set up meetings. We can do Zoom calls. I think it would be useful for you, for any of you who are looking at doing this, to dig into those broker opinion and values. They're really important to understand why we are looking at this exit valuation of that $32 million for your own sake, and not just on this project, but on every project. You can't just take the assumptions that you see in a PowerPoint for granted. You have to really look into it. So we'll look under the covers with you, under the hood. We want to spend the time with you to really understand these things. And then when you're comfortable and you're ready to make that commitment, we'd love to have you on board as a investor. And whether the minimum investment is 100,000 or 75,000, not a problem. But we're only raising $3.5 million, so that'll go fast. That'll go fast.
Good stuff, guys. Really good stuff. I enjoyed, Al, the comp analysis and the area analysis that I enjoyed, and also Ben, thanks for walking through exactly what happens to an investor's money through the cycle of the investment. That was really useful. I think some of the questions are really orientated towards people that might actually want to live there. Like, did somebody ask, did they see the price points for the units on that one slide that covered valuation?
Price points for units. So that's a great question. Al, do you want to talk a little bit about it and how it compares to selling units in sort of in the comparable areas?
I think that's one of the incredible opportunities that you have here. If somebody wants to talk to us about buying a unit, that becomes a no-brainer. Just be in touch with them. We'll sit you down. We'll walk you through the different options of plans. There's several layouts, and there's several options of height that you can have with full balconies over the water. And one of the things that struck me as someone who's both high-rise buildings downtown Boston all the way out to the 495 strip, is that there are many options in New England, but there's really almost zero options at this price point. And that's why I feel so confident about this being a very unusual niche that we provided in this project. So for people that are interested in talking about this, I think the most important thing to understand is we will be building the project ourselves. And then we will do a finishing station on site where we can give you options to customize. And then you could have the luxury of watching the project come up over the next year. And then if anything changes with the town allowing us to break up the certificate of occupancy, if you were in one of the first buildings or the second building, you could probably get occupancy sooner. The only reason we're being very conservative in speaking about the 24 months is that we've had high-level meetings with the town, and they want us, due to the water, to do all of the life safety, all of the site completions and conservation approvals for all three buildings as one attempt. And so that's what's making the delivery point be in 27. But love to work with anybody who's interested to talk to us directly. And I think without sounding crass, it's a situation where there are only 48 units. And as you know, in the New England region, there are so few new builds going on that I get calls all the time, people saying, when are you going to open up for sales? So if you have an interest, I would just politely say, reach out to us, and we'll be more than happy to sit down with you, either by Zoom one-on-one, if you're out of the area. If you're in the area, we'd be happy to sit down with you face-to-face and walk the site with you.
But
Thanks.
Joe,
Thanks, Al.
directly to your point about the price points, if people are looking at it, how we model the price points, each of the broker opinion of values, each of the brokers had their own strategy for doing the pricing. And so that would be what if someone were to send me an email saying, how do you break down the price points for the units? I would send them the 3 different broker opinion of values and say, you know, this is this guy's strategy for doing this guy's strategy. However, they did their strategy, they all came out at the same price points over the project. But you know, exactly what price is the right price for the penthouse unit in the first building is going to be different with one broker than another. So
Sure. Understood. I think
Can I take
wanted to
1
get a
second?
general idea. Go ahead, Al.
So the point you just raised, I just want to put a lid on that statement. One of the brokers that gave us an opinion is an active high-level developer who owns a brokerage house and owns his own development and manages his own properties, and he came up with a number. The second one is a very highly successful entrepreneurial brokerage house in the area who is very active in the area with new construction, all down 495, and they came up with the same number. And then the third person is somebody who not only runs his own brokerage company, but also helps REITs and developers set prices for large-scale developments. And he came up with the right price as well. So, and then the fourth was the same. So they're very different people who all came to the same number, which is something Ben is alluding to, but I just want to sort of give you a little look under the lid there.
Yeah, thanks for putting an exclamation point on that, Al. Another question from, again, I'm kind of joking about potential owners, but somebody wants to know what the boating speed limit is on the channel on the river.
Oh, over there is a no wake zone.
No wake
There are
zone.
some no wake zones.
There's somewhat no wakes. I think
Around the yacht clubs, there's no wake
Yeah.
zones.
No wake
well,
zones.
we've got a yacht club.
You can actually open it up for about a half a mile at a stretch sometimes, or a couple of miles that.
I think it's important to understand that you've got a yacht club, just a substantial yacht club just to the left of the project, or to the right as we're looking at that slide. And, you know, there's going to be some activity, and of course, there are going to be some kids around, you know, every now and then.
But they're big boats that are on this river. This is not a small boat river.
No.
Yeah, they're really big boats.
And the town runs river cruises with a large white boat, which you can go on publicly from the center, just off the bridge, which is in one of the other slides. So there's a lot of water activity around you here. And if you get into the Newburyport area, there's the most wonderful waterfront restaurants, and people take their boats up and just dock at the public docks and go and have dinner and come back.
Nice. Attendee Peter, I hope that answered your question. And as far as the presentation, Moshe, if you're controlling the slides, could you put up the contact information again? Because somebody wanted to get a hold of these slides, and I think that's an excellent opportunity to engage.
Moshe's on mute, so that now the silence is deafening.
Yeah,
It's the last one.
It has to happen at least once every webinar. Don't worry.
Yeah,
about
I'm gonna throw our contact information into the chat here.
And also, Peter and everyone else, you're going to receive a link for a replay of this, and it should come out later today or by the end of the day tomorrow. We tend to get them out within 24 hours or so. So you will get a replay link so you can watch this again. And then we'll send the same with Moshe, Al, and Ben. You'll get links to, so you can do with that what you will.
Sure.
Yeah. I think that's it for questions, guys. Very exciting project. Lots of good information, and you covered the bases in terms of risk analysis and, you know, getting people familiar with the area. I'd wager that most of the people on here are not familiar with the general, you know, Boston area, much less the area that you're doing this project in. So that was good background as well. So we thank you for your time. That's always a great value add for our audience. And those of you who attended today, we thank you for your time in the middle of a busy Thursday. Take care. And guys, thanks again.
Thanks, Joe.
All right.
Thank you.